Welcome to ForexTV.com. Today's Wednesday, July 29th. I'm Tim Kelly with your New York Forex Market Buzz. The dollar is rallying as investors take profits on risk assets, which have rallied strongly over the past month, and U.S. equity markets are well into negative territory. Commodities, including crude oil and gold futures, are also sharply to the downside, further lending to dollar strength. The yield on the government 10-year Treasury note is now up 2 basis points to 3.71%. U.S. stocks extended their decline after the Treasury sold 5-year notes at a higher than forecast yield, increasing borrowing costs for the government as it pays for its economic rescue package. Meanwhile, orders for U.S. durable goods, excluding automobiles and aircraft, unexpectedly rose in June, signaling manufacturing may expand in the second half of the year. Excluding transportation equipment, demand for goods meant to last several years climbed 1.1%, the most in 4 months, that according to the Commerce Department. Total orders, however, fell 2.5%, the first decrease in 3 months. Today we're joined by Vassili Serebriakov, currency strategist at Wells Fargo. Vassili, welcome.
Thank you.
Vassili, thanks again for joining us today. We're seeing a little bit of a pullback here. You and I discussed a little bit before we came on the air. As you pointed out, we're down significantly, especially on the high yielders and some of the commodity currencies such as CAD and Aussie dollar, but still trading in the range as you pointed out, pretty much in the trading range for the majors, especially euro dollar. What's your take on today's action?
Well, I do think that there must be some disappointment in the market in terms of that while some of the forces driving currencies right now, such as equities, have managed to post new highs, certainly as far as last week's price action was concerned, the dollar has not really broken out of its ranges as far as most currencies are concerned. Also, I would add the fact that the accumulation of the long positions on some of the currencies, including the euro and the Australian dollar, has probably contributed to today's sell-off in those currencies. Okay.
Well, we're seeing also we got the EIA numbers, which showed that there's a larger buildup in crude and crude-based supplies here in the U.S. That has crude down, and gold is following, so that's got to be a little bit more supportive of dollar in that. It's easy to see that correlation. But getting back to the equity correlation, Vassili, I got the sense in the past week, talking to analysts on this show and reading other research, that a lot of folks think that S&P in the short term is overbought. Do you agree?
Yeah, I think that would generally be our view. Certainly, if we look at the comparison between the economic performance and the financial market performance, it does appear that the equity markets have already moved in to price a very vigorous economic recovery here in the U.S. and around the world. Now, there have certainly been more positive signs on the economic data front over the recent weeks. However, we're still not convinced that really the strength of the rally in equities and commodities and financial markets in general is consistent with the underlying economic picture. So overall, we do think it's going to be the case of the financial market optimism coming down towards economic reality rather than economic reality catching up with the financial markets. So we could see potential for a correction lower in the U.S. equity indices in that context.
Right. So, hey, Vassili, in terms of the trading ranges, let's talk currency specific now. Right now, seeing Euro 140.17 that traded, it held the figure. excuse me, held the figure 140. Has tested that and looks a bit heavy right now. So, starting with Euro, do you think this is the start of a new trading range here?
Well, it's been mainly the case of the trading range shifting slightly lower, slightly higher. There was some minor resistance around 140, 50, 60, so we've broken through that. I would suspect that 140 is mainly psychological resistance. In terms of more significant support levels, we're looking at just above 139. if you take a slightly broader picture into consideration, the support at 137.50 is really the critical level for the euro, and these are the lows that we've seen in recent months. But again, judging from the recent patterns, it does appear that those forces such as equities give us a lot of back and forth price action in the currency markets, but it's really they're not causing a breakout from the current ranges, and that would still pretty much remain our view for the short term.
So in terms of what's driving, especially euro dollar, we're seeing that perhaps equities are overbought, that there is a significant recovery priced in. When you start to add up all this data and then step back and look at it, we say, wow, we probably are have overshot some of the some of the targets, and that's pretty much the standard for financial markets, not just FX markets, although it's a little bit more exaggerated in FX. In terms of the upside but you've told us about the downside, Vassili. In terms of euro higher from here, you see anything that could get euro back to that to the levels we saw last week?
Well, we don't think anything, or we don't see a particularly high chance of euro supportive news or events coming out of the eurozone necessarily. So I would answer the question by saying that the euro strength will probably have to be associated with general U.S. dollar weakness. And that weakness, again, can come from two sources, probably either renewed market optimism and further gains in equity prices, or we would be careful about thinking that further gains in equities are necessarily bad for the dollar, or some renewed concerns about the state of the U.S. economy, some of the structural concerns regarding the budget deficit. These are probably the kind of factors that would help the euro. That is not our medium-term view, however. While we do think the markets will probably range trade in the short term, we do think that over the medium to long term, current levels probably present a pretty good selling opportunity as far as the euro is concerned.
Now, we talk a little bit about fundamentals here. From a trading perspective, seen a pretty big run-up in euro. We've seen a big run-up in Canadian dollar against the U.S. dollar. We've also seen Aussie reach its 2009 high against the dollar. From a trading perspective, we're looking at this like a trader. Do you think we're just taking a little profits here and perhaps with the current situation, a little risk off the table?
Yeah, and I think it shouldn't be surprising given the strong performance in those currencies and in the underlying driving forces. Certainly, if you look at the relative performance today, I think it's interesting that, for example, the pound is outperforming the euro. And again, looking at the positioning data, for example, some of the IMM futures positioning numbers, it does appear that the surge in euro longs is something that may be contributing to the relative underperformance of the euro today. But overall, it does look like a period of profit taking, or to put it slightly differently, a short squeeze on the US dollar position.
Vassili, let's transition from there to one of the most difficult things that I look at on a daily basis, trying to figure out dollar yen right now. And I'm going to ask you to help me with that one. Right now, trading 94.94. That's been in a bit of a tight range today, but here's another currency, and perhaps I've said this in past segments. This pair just does not do what is expected for it to do, almost ever. So I'm going to throw a tough one, a ticking time bomb in your court.
Yes, it's certainly been a pair that perhaps confounded some of the expectations. But I think the bottom line is that we have not really seen a lot of direction in the Japanese yen recently against the dollar. I think that the yen has regained some of its safe haven status. So if, for example, the equity market pullback were to materialize, we think the yen is going to benefit. When and if the yen against the dollar, for example, gets close to the 90 yen level, I think it's going to bring in all those concerns about the Japanese Ministry of Finance and the Bank of Japan intervening verbally into the currency market at that point. Again, depending on your perspective, and for those looking to take a more medium to long-term view, we do think that these sort of levels, close to 90 or just above 90, present a good selling opportunity for the yen.
Okay. I'm just looking at some of the calendar events going forward, just to kind of give some perspective to the rest of this week. Vassili, what do you see as the main drivers? Tomorrow we've got initial jobless claims, and that's probably the most profound, impactful event that we have. We have German unemployment, and we have HPI out of the UK. What do you think the event risks are for the rest of this week?
Well, it's not that much. I would say overall. It certainly seems, as far as tomorrow, jobless claims numbers are expected to be a little bit weaker than what we saw in the previous week. But again, absent a major surprise in the data, I don't think this is going to be an overwhelming driver of currencies. Certainly, the U.S. GDP numbers, I would point out on Friday, are probably have the largest potential for being a market mover as far as data are concerned. But again, I think those of us who track data very closely have been somewhat disappointed with the kind of impact it has had on the markets. And certainly this tendency, this somewhat counterintuitive tendency, when stronger than expected U.S. data is bad for the dollar and vice versa, that's pretty much continued in recent weeks. It's not going to last forever, but it certainly remains the case so far.
Okay. Vassili, thanks so much for your insight today. I appreciate you joining us. It's always a pleasure having you on the show.
Thanks for having me.
This has been your New York Forex Market Buzz with Vassili Serebriakov of Wells Fargo. Join us later this afternoon for PM Exchange right here on ForexTV.com.